Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 12th of July. Now, just having a look at the markets, you really need to focus on what's actually happening here. So, obviously, yesterday, if we have a look at a few of these major currencies, there wasn't much movement in euro or sterling, but those announcement by Trump about those 200 billion extra tariffs, dollars worth of tariffs on China, did see dollar yen a little bit all over the shop. Dollar CAD wasn't moving at all. And Aussie and Kiwi had started to move a little bit lower. Now, it was by no stretch an easy trade at all. Okay, so I've just left a few of the trend lines up here just to give you a look at what was going on. And this is what happens with geopolitical events. There's generally no start or finish. Okay, not like economic numbers or a central bank meeting or announcement. There's a start time, there's the press conference, it's finished. Right? So with these geopolitical events, they do not finish. Okay, they dissipate over time, but they don't have a start and finish time, and that's the problem. So what we did see is basically Aussie, which is going to be impacted, and New Zealand for that matter as well, by the tariffs, but it sort of just got stuck in a 10 to 20 point range for most of the day and then started to whip around a bit. Now, that was sort of all well and good and got things moving, but it was really the US numbers that really got everything moving. Okay, the US PPI numbers, producer price index, another key inflation number, as I mentioned yesterday, got the dollar moving to the top side, and you see dollar yen move up to the top side. So the whole move here was two components. Okay, this is what you have to sort of piece together. It's not just the trade war isn't responsible; it was the start of it, and the US numbers were the second part of the move. So it just so happened that the US numbers lined up perfectly with what the sentiment was from those US-China trade tariff situations. So, and that's what we've got there. So that's just so don't think it's all the trade wars, because that was just the start of it. If anything, they aren't coming on for 2 months. And I think the market expects that to sort of just roll over. But the US numbers, once again, strong, brings the Fed back into the discussion. And that's why things moved on. Now, have a look. For those traders, I was just talking about yesterday in the trade zone, just giving you a bit of a heads up on the Bank of Canada rate decision. I thought it'd be a quick one too. The first move down on the actual rate decision itself. Now, dollar CAD sitting up there around 131, sort of 30. It was a 1-2, but not what I was thinking of. Okay, so what they did do, they raised rates by 0.25%. They actually also raised their inflation forecast, right? Which is a sort of a hawkish move. But then at the same time, they were talking about how all these trade wars and oil situation and OPEC is going to have a bigger impact. So that sort of nullified their increased forecast for inflation. So if anything, the Bank of Canada is neutral. But what did happen after this, and this is where when you're trading a currency pair that has a number of different variables, you have to really focus on what's actually happening. Now, oil, right? Oil dropped $3, sort of was trading up around 73, 74 cents, and it dropped back to 70.5. You can see the green bars here. It's had a big fall as well. And then you throw on top of that strong US inflation numbers. So you got US dollar pushing higher, oil falling, pushing the CAD lower, and all of a sudden the Bank of Canada raised rates and the currency is 100 points higher. Now, for new traders, that may be hard to understand, but we were sort of calling it yesterday, but the circumstances were a little bit different to what I was talking about. I thought they would be raising rates. We see a little knee jerk to the downside. Then they talk about the upcoming problems with NAFTA, OPEC, etc., and we see the move higher. It's sort of what did happen, except the one extra variable I did put in there, they did raise their inflation forecast, which saw that first initial move more than I expected. So more like 50 points as opposed to sort of 20 that I was sort of calling. But you know what? The writing was on the wall. It's a very, very hard situation to trade, so don't beat yourself up if you missed it. I was actually just sitting back and watching it, because there's no point getting involved when there's huge amount of volatility and there's a huge amount of geopolitical situations going on. All right, this is one of the trickiest times of 2018, just at the moment, right? So if you're finding it tough, I mean, everyone is. The guys at the banks are tough. I've been talking to quite a few of my mates, and they are just saying, well, the movements are coming out of left field. Now, the key things here on Metastock, okay, dollar hit 6-month high against the yen on strong inflation. Yeah, that's true. The dollar yen did really kick in. Now, that China trade wars, right? You'd think dollar yen would fall, okay, but the situation is that the US data is dominated, and because there's still a 2-month lag before these new tariffs come on play, China is talking about retaliating. They don't have a lot to retaliate, right? They need the US more than the US needs China. So they're starting. They're going to get creative with what they're going to retaliate with. It's not exactly clear at the moment, but the offshore yuan is continuing to fall. That's pushing Aussie and Kiwi lower. Now OPEC, they talk that. I mean, they're so full of crap. Okay, they're talking about they don't want price volatility. They've just pushed prices from $45 up to 75. I mean, they're the biggest crooks on the global planet. Now we've got Brexit overhanging sterling, but once again, that's gone a little bit quiet. We've had the ministers resign. Theresa May still hanging on to sort of resemblance of power. If anything, sterling is lower because of those US PPI numbers, and I've already sort of gone through dollar CAD. So you know what? It's still not really clear, gorgeous trading conditions. Okay, by any stretch. And that's because a lot of these things are unresolved. Now, if we come back just to have a look at those US numbers, as I said, the PPI, it's sort of like a secondary number, but, like all inflation numbers, they are very important. So when you're looking at the core numbers themselves, 3.4 versus 3.2, a 0.2% difference in inflation numbers is quite big. Okay, so that's really where the money was. And even wholesale sales, a very low impacting number, considerably higher. So all led to the US dollar pushing higher. And of course, the Bank of Canada raised rates. And they're the two major releases that we had to deal with. Unfortunately, there's a whole heap of other crap sort of going around at the moment as well. That's just what we have to deal with. So when you come back to look for the next major chance of some momentum, right? The US dollar is on the front foot. You're starting to look through, what's coming out. Now, we do have some CPI numbers out of Germany and industrial production numbers out of the Eurozone. But what the market is now, this comes at a really good time where the US numbers will shine. And what we're talking about is the US CPI numbers. Now, this is hugely important. If these numbers are strong, 0.3 would do it. 0.4 puts it out of anyone's guess in the sense that they will go 3 times. They're already looking at the Fed raising another 2 times this year. If these numbers are strong, the inflation numbers are strong, they will look towards 3. The US dollar will rally through the roof, and that's what we've currently got going. If the numbers are as expected, well, everything's on track for at least 2. If the numbers are weaker, then we may see a reversal of these current moves, right? And this is what the whole global market's going to be talking about today, is the upcoming US numbers. So as I said just a second ago, if the US numbers are strong, we're going to see a push down here in all the on the major currency pairs, and we should see dollar CAD and dollar yen continue higher. The only situation is if those numbers are weaker, then we see a reversal, right, of these current moves, but then we run back into the potential trade war situation, and we could end up just flying around and end up trading sideways with a bit of messy price action. So just be aware, it's technically things are getting a little bit beaten up, and it's just hard to sort of really manage all of your positions around what is actually going on in the market at the moment. So now just looking at the US dollar here, I mean, it's back, right? It's back on the front foot. Now I'm not going to raise, technically you don't just raise your resistance level to the high, right? This has started to form another attempt on the top side. So if anything, I'm actually drawing new support lines. You can see over here now it's actually bounced back. We do have the old support line acting as resistance, but we have resistance on the top as well. So I'm happy to move that across. If anything, the US dollar on a longer term perspective is starting to trade sideways again. But on the hourlies, it's heading to the top side. And that's pretty much where we are, guys. The equities. Now, this is the hard part, right? It's hard to gauge what is going to happen with the US and China, right? They're going to have a little battle here. Who's going to be the biggest? You can be sure Donald's going to be beating his chest. The Chinese have to get more creative, whether they're going to sell US treasuries, whether they're going to stop. They're talking about even stopping or limiting Chinese people going to China, going to the US for holidays. Apparently, that's a $115 billion industry. So there's a whole range of things. But at the end of the day, whatever they do, Donald Trump will trump them. Excuse the pun, but he will dominate. So this is what, and he hopes that it escalates so they can really increase the tariffs. So just looking on the front face of things, the Nikkei is due to up at 80 points up. All the other equity markets have been down. And even as you can see down here, copper and definitely gold. Gold is on the way up, only a small amount, but that's more to do with global uncertainty around these trade deals. So there's so many variables. Usually in normal market conditions, we don't have all of these variables sort of whipping about. Okay, usually it's a lot clearer. We have, with the major currency pairs, you know exactly what's going on. Let me just come back to that screen. Usually just know exactly what's going on and what's driving the currencies lower. Like, if we have good US numbers, we as I said, we saw a move here. It's not huge. It's like 40 points all up, say for the Aussie. Kiwi's down about 40 as well. Even dollar yen, it's up about 60, 70 points. It was enough to break through that resistance line. And look, euro here sort of banging down through lines and back up and then down. So the currencies haven't gone a long way, but they will be prepared. And don't forget, this is the biggest release of the week, the US CPI numbers. So make sure you are keeping a very close eye on that, right? If you're trading, keep control of your capital, right? When the markets are volatile, if you've been getting chopped up, then make sure you do, take it easy, right? And this is pretty much the end of the week as far as major economic data goes. Okay, we've got the ECB monetary policy meeting accounts. That has moved the market in the past, even though there's no chance of any change of rates, but just keep an eye on that. But the US CPI numbers, the last major release for this week, hugely important for all the major pairs and the trading conditions today. Well, there's still loads of geopolitical stuff going on, but we do have the dollar with a bias to the top side, and that's a breath of fresh air and gives us something to trade with. So, if anything, I would be suggesting, just relax, have a look at your technicals. They're a little bit through some of these levels. We've got a good, 12 hours before the ECB, and then a little bit longer for the US CPI. But I can't imagine the currency is going to do too much outside of what they've already done, unless we hear something direct out of China. And just with that, you should really be paying very close attention to the offshore one. If I can just get that up. There we go. So this is where the raw nerve of the market is for me at the moment. You're watching dollar China. Okay. Now this thing is up towards 6.72. If I go to the daily charts, you'll have a look at this. This is actually plays into China's hands. Exactly what the US is doing. That pushes their dollar lower, so they don't have to sort of manipulate the dollar themselves, their currency. It is already sort of falling off the radar, makes their goods even cheaper. So regardless of the tariffs, this may actually work against Donald Trump anyway. But look where it is at the moment and where it was just a few days ago or last month. It's come a hell of a long way, and there's still plenty of room. So if you're trading that Asia session, you're watching the Nikkei or you're watching the news and some Chinese news comes out, make sure you have this chart up, and this is where you can gauge reaction. If it keeps going higher, Aussie and Kiwi will come off. Okay, if it goes down, Aussie and Kiwi will rally. That's as simple as it gets, right? Euro and sterling. Now they've come off with the whole US dollar, with the US numbers being strong. So that's a different move for those pairs. But just keep an eye on that. And if anything, you've got the obviously keep an eye on the yen crosses here. Very tricky with dollar yen shooting to the top side. You can see how most of these pairs, I thought these were going to come into play big time yesterday. but they just get hacked up through the cloud. Japanese traders will not be liking this at all. So really, CAD yen, I expect CAD yen to actually fall now that we've got oil back down towards $70. It makes sense that this CAD yen corrects by about 300 points to the downside. We just have to wait and see what happens with dollar yen. But to me, this is probably the best trade on the market at the moment, is just waiting for CAD yen to fall. And that's it. You know, it's basically, you know, the markets have been hacked up. There's a lot of news out there around a lot of ridiculous things. So from here, it's just a matter of, you know, waiting for the opportunities to build. And if there's no major opportunities, then look for the key data for direction. And that's where those US CPI numbers are going to really come into play. All right. As I said, this is the last major release for the week. So make sure you tune into those US CPI numbers, and we'll have a crack at those. All right, guys, we'll catch you in the trade zone. Have a good day. Tricky conditions. Just, you know, bide your time while let these lunatics, politicians play their game. All right, we'll catch you later on.